You probably spent 500 pesos this week without thinking about it. A coffee, a convenience store run, a late-night delivery fee you approved without reading the total. It was gone before you even noticed it existed. But what if that 500 pesos, the one that vanished without a trace, was actually the single most powerful financial tool available to an ordinary Filipino today? Here is what almost no one stops to calculate. The Philippines has roughly 115 million people. About 70 million of those are working age. Most of them earn something every month. And yet, according to the Bangko Sentral ng Pilipinas, fewer than 2% of Filipino adults are actively investing in stocks, mutual funds, or dividend-paying assets. 2% in a country of 115 million. That means 98 out of every 100 Filipinos are watching their money sit still. Or worse, slowly lose value to inflation, while assets continue to grow for the 2% who figured it out. So here is the question that nobody asks out loud. What if every Filipino, every single working adult in this country, invested just 500 pesos a month? Not 50,000, not 10,000, 500 pesos, the cost of a fast food combo meal and a milk tea. What would happen to the country? What would happen to you? What would happen to the families, the towns, the cities that have been waiting 3 generations for a financial miracle that turns out to have been sitting right there in their wallets the whole time? The answer will change how you think about small money forever. Start with the math. Because the math is almost violent in how beautiful it is. If you invest 500 pesos a month starting at age 25, and that money earns a 10% annual return, the kind that is realistically achievable through a Philippine Stock Exchange index fund or a well-chosen dividend portfolio, something extraordinary happens over time. By the time you are 65, you will have contributed 240,000 pesos of your own money. That is less than what most people spend on a second-hand car that depreciates the moment they drive it off the lot. But your account will not hold 240,000 pesos. It will hold over 3,100,000 pesos. Your 500 a month will have multiplied more than 13 times over. And the engine that did it was not luck, not a promotion, not a lucky stock pick. It was time. This is compound interest, what Albert Einstein reportedly called the 8th wonder of the world. Whether he said it or not, the concept is real, and it has been creating generational wealth for centuries. Every dividend you earn gets reinvested. Those reinvested dividends earn their own dividends. That cycle repeats, month after month, year after year, building a machine that works whether you are asleep, on vacation, or watching this video on a Tuesday night in your living room. French economist Thomas Piketty spent decades analyzing wealth data across hundreds of years and dozens of countries. His conclusion was uncomfortable but clear. The force that separates the wealthy from everyone else is not effort. It is not education. It is not even intelligence. It is the return on capital. People who own assets that grow earn more from those assets every year. People who own no assets never enter that equation. 500 pesos a month is your entry point into that equation. It is the door, and the door is open. But the real scenario, the one that expands your thinking, is not just about you. Imagine every working Filipino doing this at the same time. 70 million people, each putting in 500 pesos a month. That is 35 billion pesos flowing into Philippine markets every single month. 420 billion pesos per year. To understand what that number means, consider that the entire national budget of the Philippines in recent years has sat around 5 to 6 trillion pesos. A sustained 420 billion peso annual injection of domestic investment capital would fundamentally alter the country's financial landscape. Not in a decade, in a few years. The Philippine Stock Exchange would no longer be dominated by foreign institutional money that floods in during optimism and evacuates during global fear. It would be anchored, genuinely anchored, by tens of millions of ordinary Filipinos who have a personal stake in every listed company. Markets driven by citizen investors behave differently. They are more stable. They are more long-term in their orientation. They reflect the actual productive output of the real economy rather than the mood of traders operating in New York, Tokyo, or Singapore. Researcher Ana Maria Lusardi one of the foremost global experts on financial literacy and its economic effects, has demonstrated through decades of cross-country research that populations with higher investment participation rates do not just accumulate more individual wealth, they produce stronger, more resilient local economies. Because the invested citizen is an engaged citizen, they pay attention to where companies allocate capital, they vote with their money, they show up at shareholder meetings, they hold boards accountable in ways that passive savers simply cannot. The culture of the country shifts. The relationship between ordinary people and the companies that shape their daily lives shifts. So why is none of this happening already? The first honest answer is that almost no one in the Philippines has been taught that 500 pesos is enough to start. The mental image of an investor in this country is someone with a Bloomberg terminal, a finance degree, and an uncle who works at a brokerage. That image was never accurate. It was a story. One that benefited the people who wanted the market small, exclusive, and populated only by people who already had money. The truth is that ginvest through GCash, the pagibig MP2 Savings Fund, COL Financial, and several other accessible platforms allow any Filipino with a government-issued ID and a smartphone to begin investing with 1,000 pesos or less. The barrier is not money. The barrier is the belief that you are not the kind of person who invests. That belief is wrong. The second answer is something behavioral economists call present bias. Richard Thaler, who won the Nobel Prize in Economic Sciences in 2017, built much of his career studying why human beings consistently and predictably choose small rewards now over large rewards later. Your brain processes a 500 peso sacrifice today as a loss. Immediate, concrete, emotionally real. It processes 3 million pesos at age 65 as abstract, theoretical, almost imaginary. So you spend the 500 pesos every month, not because you are irresponsible, because your brain is doing exactly what evolution designed it to do, which is to prioritize the immediate over the distant. But Thaler also proves something hopeful. When people are shown the actual future numbers, when the 3 million pesos is written plainly in front of them with the math explained clearly, the present bias weakens. Information changes behavior. That is the purpose of this video, because seeing the number is the first step to feeling the number. The third answer is distrust, and it is the most understandable one. Millions of Filipinos who could invest have watched relatives lose money in pyramids, ghost cooperatives, and Ponzi schemes dressed up as community investment clubs. The scars of those losses are real, but the distrust has been misapplied. A scheme promising 30% monthly returns is not an investment. It is theft disguised as opportunity. A diversified index fund tracking the actual earnings of actual publicly listed companies is a fundamentally different instrument. Learning to tell the difference takes less than a day of focused reading. It requires someone to explain it. And for too long, the wrong people controlled that explanation. Think now about what a nation of investors would look like from the outside. Foreign direct investment follows domestic investment confidence. When international capital observes that ordinary citizens of a country are actively participating in their own economy, that the taxi driver, the nurse, the market vendor all have positions in publicly traded companies, it signals something powerful. It signals a growing middle class, a deepening consumer base, a population with long-term stakes in economic stability. The 500 peso investor is not only building their own wealth, they are collectively signaling to the global market that the Philippines is ready to be taken seriously as a destination for serious capital. And here is the historical truth that rarely gets stated plainly. The wealthiest families in this country did not build their empires through salaries. The Gokongways, the Says, the Zobel de Ayalas. They compounded their capital across generations through ownership of assets, through dividends reinvested, through equity that appreciated. The mechanism they used is not secret. It is not patented. It is not restricted to their bloodline. The same compounding engine that built their empires is available to you today, through a phone you already own, on a platform you can download in under 3 minutes. The only thing they had that you currently do not have is time already behind them. But time ahead of you is the only kind that counts. Here is how you start. Open a GCash account if you do not already have one and enroll in ginvest. Choose a mutual fund or UITF indexed to the PSEI. Set a recurring transfer of 500 pesos on the day your salary arrives. Before you pay anyone else, before you buy anything, if you are a Pagibig member, open an MP2 account. It currently pays dividends of around 6 to 7% per year, backed by the government, and it takes 20 minutes to set up online. You do not need to understand every detail of how markets work before you start. You need to start, and then you will learn. That order matters. Subscribe to this channel. Every week, this channel explains the real financial systems, historical patterns, and behavioral science behind money in plain language. The kind that works for people who were never handed a trust fund or a finance textbook. Hit the notification bell so you are here for the next one. Because here is where this ends. And it ends exactly where it began. You probably spent 500 pesos this week without thinking about it. But the Filipino who becomes a millionaire in the next 30 years will not be the one who earned the most, or inherited the most, or got the luckiest. It will be the one who, on some ordinary Tuesday with no fanfare, made one quiet transfer of 500 pesos into an investment account, and then did it again the next month, and the month after that, unremarkably, invisibly, until the money was no longer small. It never was.